Howdy there, folks. Busy video here. We got a lot to get into in this video, so let's just jump right into it. And so looking at futures, first off here, Dow down, S&P 500 down, NASDAQ down, Russell's down as far as futures go as well. Important day. Friday's an important day for the market. The reason being is there's a thought process out there right now that essentially what happened Thursday, right? Market opens massively down, comes back strong throughout the day. There's a thought, and I'm seeing this a lot. I saw it in comments of the video and whatnot, that I put out today, the other videos I put on the YouTube channel today. And there's a thought process out there that what happened today, that was what's called basically kind of almost like a dead cat bounce, they call it, okay? Or essentially just like a one-off freak day where it was like, yeah, things came back strong. Maybe there's a bunch of short squeezes, but, just wait. Tomorrow's going to be down. Monday's going to be down. So tomorrow's a really important day to just kind of see what happens with this market, see where things trade at. And I'll tell you this. If the market somehow is green tomorrow, then that same bunch that's saying, well, okay, it went green 2 days in a row, everybody's going to be saying, well, Monday it's going to be red. And if it's green again on Monday and green again on Tuesday, at some point the disbelief just starts to kind of mount up. Now, what I will say is if we somehow are green tomorrow and green on Monday as well, that's very, very bullish for the stock market. I can tell you that much. Very, very bullish, at least for the short term for the stock market, because, yeah, everybody's pretty much expecting this baby to go back down, maybe not to anywhere close to the lows where we were at on Thursday morning, but at least down quite a bit over the next couple days. So we'll see what happens. I don't want to make any predictions out there. I'm just somebody that's watching this market kind of develop here. Okay, this is very important. Very important. Ukraine president says Russian advance, quote, has been stopped in most directions. The enemy has been stopped in most directions. The fights continue, said Zelensky, the president. Ukraine's army has about 145,000 to 150,000 troops, according to a January report. The situation on the ground in Ukraine is fluid, and accounts of the military situation are difficult or impossible to confirm. Now, this is very important. This is good, but at the same time, don't get too excited about this, because maybe they just paused for a moment here, catch their breath a little bit, and then they're gonna keep going in. So don't get too excited and think, well, it's all over now. I think it's a good thing. I think it's a good sign, but don't get too hyped on this. Essentially, you got to kind of, in these situations, hope for the best, prepare for the worst, and something like this is important. But let's not get too overly crazy about it, because maybe it's just a break, and then they keep trying to come in and whatnot. What I will say is, from what I've heard, at least, it's not the most impressive kind of invasion out there. Let's just put it that way. Let me show you something. Alrighty, folks, let's watch this together. Ukraine war, lost Russian medical team asked for directions. And yeah, this is official, okay? They got the Z's and everything on there. Check this out, okay? They're lost. They're like, where the heck are we going? Like, what kind of operation is this, in all due respect? They need directions. Like, hey, where do we go here? It's a military operation. Like, the way I assume it should work is you should know exactly where to go, exactly how to handle all these situations. It should have been prepped ahead of time. Like, the fact that you need directions, oh boy. That's all I got to say about that. Oh man. Yeah. We'll see. Yeah, they're like, oh, wait, maybe we're going the wrong way. Look at, they're just driving the wrong way now. Oh, gosh, look at these cars going this direction. Now they're like, wait a minute, no, maybe we need to go back this way now. Oh, gosh, look at these trucks. They don't know where they're going. Like, wait, we got to go back this way now? Oh, gosh. Like, oh, guys, I think we messed up. I think we got to go actually back this way. And then you got the ghost of Kiev. Okay. So supposedly, from what I've heard there, this is a Ukrainian pilot that's supposedly downed 6 Russian aircrafts in the first day of fighting. That's word on the street. It's kind of gone viral on the internet. That's epic. That's all I got to say about that. He went beast mode. Crazy. Okay. So we'll see what happens with this whole Russia situation. Obviously, it's going to be a developing situation over the weekend, and it's going to continue to shake out the market. You're going to get some. The good news is the market doesn't believe good news right now. So even when we read that headline right now, The good news is the market doesn't believe good news. The market only believes bad news right now because the market's so fear-driven. So good news will kind of be brushed off right now. And if we get any good news, and at the end of the day, got the ghost of Kive taking care of things, okay? Square, let's talk about Block for a moment here. So Square reported earnings. Now, first off, the stock opened at about $82. $82 for Square. The stock is sold off way too heavy. I mean, this stock in PayPal as well, both those companies are being treated like they're flipping flapjack and penny stocks. Like, how ridiculous is this? Like, Square should not be, down 70% plus like it was this morning. PayPal down 70% plus. These stocks are being treated like they're penny stocks. It's a joke. It's a complete joke. And so nonetheless, okay, Square had a nice bounce back off that 82 low, finished out up over 7%. That's like, you run the numbers on that. That's something like a 15-20% change there, like some insane number like that. That's beast, okay? That turnaround they had from 82 to close at about 95. But then after hours, I guess the earnings were really uplifting. So I still got to listen to that earnings call tonight. I'm going to listen to that before bed and see what they had to say on there. I think Square has gotten to very interesting levels. And if it wasn't for the fact that there's like a million other stocks in the stock market that are great deals right now, I would be buying Square, especially on a day like today when it was trading in the 80s. Come on, man. It's ridiculous. They got the number one most popular app in the developed world, in the Cash App. The number one in the finance category. Like, that's ridiculous. Plus, they got their historical business, which is a beast. Crazy, okay? So that one's still a stock to watch nonetheless. Beyond Meat, BYND. So Beyond Meat, this one, I got to listen to the earnings call, see what happened there. Stock down 11%. I saw the numbers, nothing exciting there. But when it comes to Beyond Meat, it's all about the 22 numbers. 21 was just a year to forget for Beyond Meat, to be quite honest. 22 is an exciting year because they're going to have what's going to be likely a reacceleration of growth. I think the numbers are going to be tremendous quarter after quarter after quarter. They're going to show reacceleration of growth. I think Beyond Meat is one of the more attractive risk for. If we're going to talk about companies that are money losers, I think Beyond Meat represents one of the most attractive risk rewards over not just over the next several years, but over the next, if you're thinking even over the next 2 years. I very rarely, I can't even think about a stock that I saw a massive reacceleration of growth during a course of a year and that stock didn't go beast mode. And so that's what's going to happen with Beyond Meat. I think it sets up really, really nicely. I'm even considering, especially if the stock falls in any major way, I'm actually even considering some 2024 calls for Beyond Meat because, like I said, I think it has a good long-term story, but I think it really has an attractive next 2-year story. Let's call it that, okay? So Beyond Meat, got to listen to that earnings call there, see what happened there. Coinbase down after hours with their earnings. Coinbase, here's the deal with Coinbase, okay? Let me explain this. No one wants to own crypto brokerages right now for 2 reasons. One is massive competition in that space. You have almost every stock brokerage is now adopting, where you can buy crypto. Even companies like PayPal, Venmo, Cash App with Square, even companies like that are allowing you to buy crypto. Crypto is so competitive. It is ridiculous, okay? That's the first reason why folks and by the way, Coinbase crushed it. I mean, crushed it with their revenue, and the EPS beats were massive. Their earnings, their earnings were like, you would think that stock would be up 15, 20, 25% after hours. But right now, no one wants to own crypto brokers because there's so much competition. 2, here's the thing. Wall Street still is not 100% believers of crypto. And so if you have Wall Street still not 100% believers of crypto, and you have a situation where there's massive competition in this market, it's so hard to find buyers. And that's why this one's it had a lot of trouble since it went IPO. This is not some money-losing company. A matter of fact, this is a cash flow machine. This is a profit machine. This company is a beast. But no one wants to own this sort of company in this sort of market, especially. Maybe a few years from now, if Wall Street believes more in crypto and a lot of this competition calms down, maybe something like Coinbase is a stock that thrives. But right now in this sort of market, no one wants a piece of that in this sort of market. And by the way, Coinbase is doing a lot of things outside of crypto, but Wall Street, they have trouble wrapping their heads around all these new things that Coinbase is working on. Okay, so that's kind of my 2 cents there with that one. ARK had a capitulation day at 57.55. Who would have thought at 57 ARCs back down to here today, right? Closed at 62, or excuse me, 65, 62. So that's a good news there. When it comes to ARC, they just need a breather. They just need to catch their breath for a moment. Like that's literally what they need. They need to just catch their breath for a moment. And, this is a fund that is just an ETF that's just been absolutely decimated. I did a video earlier today on all their buying. There's 8 stocks they've been buying extremely heavy over the last 36 hours. I did a full video covering all those 8 stocks and going into those. But essentially, they just need to catch their breath for a moment. The fund has been in such a default. I should have pulled up a 1 year here. The fund has been in such a massive just decline so quickly that they just haven't even gotten a chance to catch their breath over there. And so, ARC actually seems interesting. I've even considered buying it recently, but at the end of the day, there's a lot of stocks they hold that I'm not that big of a fan. And, I even had a friend bring up to me recently, like, hey man, I'm thinking about buying into ARC. And I was like, yeah, you could do that, but why not just choose let's say the 3 stocks you like the most out of the ARC fund. And let's say you're going to put $100,000 in ARC, right? Why not just pick out the 3 stocks you like the best that ARC holds and put your money in those 3 stocks and divide it $33,000 a piece, right? Or 5 stocks. Pick the 5 stocks you like the best that are in the main ARC ETF, right? And you look at kathywoodstocks.com, my website, and you can see their top 25 positions. And then go ahead and choose the 5 you like the most and put $20,000 in all 5, I told them. And so, I don't know what my friend will do there, but I can understand people wanting to buy it. But at the end of the day, they own a lot of stocks that are probably questionable. That folks probably don't understand. So it's like at that moment, why not just own the top 5? I can understand if maybe it's the genomic space because that's very, very confusing. But with this, it's like, why not just pick the 3 or the 5 stocks you like the best, put your money in those, divide it equally for whatever you're going to put into ARC. That's just my 2 cents there, okay? Palantir, I think Palantir is the most interesting stock in the market to watch right now. It really is. This one opened at 9 and some change this morning, which is ridiculous. Kathy Wood and ARK Invest just sold out very recently out of this position. And I think it's really, man, she's going to get a lot of crap. If this stock continues to beast mode, oh man, is she going to get a lot of crap for selling out of this guy. 117 million shares traded hands today. Usually it's in the 40-ish million share range, okay? So yeah, Palantir, I think that's a fun one to watch right now. Before we get to the Kevin stuff, I got good news in regards to the Hungry Bowl. We finally got a team on the app that's starting this upcoming week, a legit team, and so I'm super happy about that. We've been out of a developer that's sold in for about a couple months now, and it is hard to find top tier developers right now in this sort of market. It really is. So I'm happy we're on the right track. Graham and I had a meeting with them today, and I'm thrilled about that. And we also started the email newsletter. If you didn't already know, check out pinned comment if you want us to send you the newsletter to your email each day. It's absolutely free to sign up for that. That will be pinned comment down there. So, Hungry Bowl, that's grind, man. It's a grind for that company. All right, Kevin. All right, let's talk about Kevin. Okay, so if you didn't know, Mr. Kevin, he bought in, I think it was right around $8 million worth of shares today. So, in regards to that, first off, I don't know the details of how much was put in each stock. I don't know if he's planning on holding this for, a day or days or weeks or months or years. I don't really know all those details. All I know is from my understanding, what I've been told, he bought in for around $8 million today. So not a small number. That's a lot of millions. That's a lot of dang millions. And he might even have been buying a little bit before that, from my understanding as well. So, in regards to Kevin, here's kind of my opinion on this, okay? So I think when it comes to Kevin, I think he's represents a lot of what, kind of a lot of the way Wall Street thinks in respect of you have a lot of different people in the market, right? You have the short seller crowd, right? You have the short seller gang. You have the day trader crowd that are trying to get in and out of stocks every second, every minute. You have the long-term investor crowd that's just like buy shares. They go down, they buy more, they put them in the filing cabinet. That's more of my approach, right? If it goes up a ton in the short term, you don't get a big position built out, sell out of it, take it and put it into those positions you really love for the long term. Just continue to add shares, put them in the filing cabinet. Don't get tied into the whole, what's going on here today, and I got to try to sell out of stocks, and I got to try to buy back in. So you have that crowd in the market, which is me. And then you have the biggest crowd actually in the market, in my opinion, which is actually folks like Kevin. And this is a way a lot of hedge funds think, and actually a lot of actively managed ETFs. Even if you look at ARK Invest and Cathie Wood, look at how much they're shuffling around stocks all the time, right? They're shuffling in, they're out. Look at, they own, what was it, 24 million Palantir shares, and next thing you know, they're out completely. Like, geez, and out like in a snap of fingers. That's ridiculous. And so what Wall Street is a lot of times, it's fund managers, it's actively managed ETFs, it's institutions even sometimes just funneling a lot of stocks around and getting out of this position, getting back into this position, and managing their money that way. And it's not my cup of tea, and it's not my way of doing it, but at the end of the day, this is a way a lot of Wall Street thinks. And if you watch a lot of interviews on CNBC, and if you spend a lot of time on CNBC, they're always having hedge fund managers on and analysts on, and they all think in kind of more of a 1 month to about 12 month span. I can tell you, I watch CNBC a good amount, right? Enough to know what's going on, right? And I can tell you, I don't ever see people on CNBC really going on there and talking about what's going on for a company over the next 5-10 years. They're almost always talking about the next quarter for a company, what's going on at that market. Here's how you need to rotate money right now. Oh, you got to rotate it to the oil and gas stocks. You got to rotate out of technology. You hear all these sorts of things, and this is the way they talk all the time. And so I think in regards to Kevin, I think that's a lot of the way he thinks. I'm not saying it's right or wrong. It's just a different way of doing it, right? It's more of I call it almost more of a swing trading mentality a little bit, where you're not really thinking about, I'm going to buy the stock for the next 5 years. You're really more thinking about, hey, I think stocks are a good deal today. I think they're going to pump, as they say, for the next, week or the next month or the next 3 months, the next 6 months. And, you're kind of always adjusting based upon the market conditions at a given time. And I have friends that think this the same exact way. They take that approach of like, hey, no, I'm not buying because, either this technical data is not here, or I don't think big money's coming in the market yet. And so it's certainly not my cup of tea, as we all know. But at the end of the day, like, I think watching somebody like him, I think it's interesting because from the standpoint of that's the way a lot of Wall Street's thinking. Think about it today. Kevin bought in, right? A lot of millions of dollars worth. Guess who else bought in? Well, clearly a lot of fund managers bought in today, right? A lot of institutions must have put money out there in the market, because you don't get that sort of turn unless we have the plunge protection team out there. You don't get that sort of turn unless a lot of other folks are thinking the same exact thing you're thinking, where it's like, hey, you know what? I think I'm going to rotate some money into this market right now. The question is, does that money leave tomorrow? Does that money leave next week, next month, 6 months from now? Are we, up from here? So that, it's intriguing, and we'll see kind of what happens there. So hope you guys enjoy this. As always, it's a fast developing market, a lot going on. And I'm going to try to cover it all for you guys in the market right now. Hope you enjoyed this, by the way, and make sure you get some free stocks from Moo. That'll be pinned comment down there, including a free TTCF share with a $100 deposit. Much love and have a great day.